Good afternoon, this is Adam Tuiaana with RJO Futures in Chicago, giving you your afternoon report for the soft commodities rundown at the end of the market here. Today is Wednesday, March 27, 2013. We'll jump right into it with the cocoa, which last traded at 21.44. That's in the May contract, pretty much puts cocoa even on the day, but down just by a hair, down 2 ticks. We got to keep in mind that Easter is at the end of this week, so the cocoa market is getting a little bit of support from the holiday, but in addition to that, we've seen some real weakness in the Eurozone, coming out of Cyprus, whether it's Cyprus or Italy or ongoing issues in Greece. All of those issues have really put a lot of pressure on the euro. And what happens is when the euro is selling off, inversely that's pushing the dollar higher. So when we see a strong dollar, then we start to see additional pressure on a lot of these soft commodities, especially the cocoa and the coffee. So we are still waiting for the European grinding totals, which are due out next month, mid-month. I won't expect those to be very positive. In fact, I expect them to be pretty bad based on those same issues with the Eurozone. So this is a market that has been in a very steady downtrend since this, September of last year. And there is, however, it's that major trend line that was in place for the downtrend for cocoa was breached at the 21.50 level. It has been holding support over that area, so that is pretty positive. It's holding support over the break of that trend line, so it could possibly be a reversal. I think it's pretty early on to tell, but technically it looks like it could be forming a head and shoulders pattern reversal to the upside if in fact it's able to break the shoulder line of the head and shoulders pattern, which is sitting right at that 21.80 level. So if it breaks that, we do a quick measurement and we have a measuring objective if in fact it starts to rally up that point somewhere in the area of 23.50-ish. So, but for the time being, I'm not going to call a top or a bottom on this at this point. I'm just going to stay on the sidelines for right now. So 20.75 is going to be your downside support. 21.80 is going to be your upward resistance. Moving on to coffee, last traded at 136.60 in the May contract. Big day down for coffee. Actually puts it down 100 ticks on the day. It has been able to rally over the last 5 trading days, but I think it's into some very good resistance right here at this 130 at the 138 level. So we visited that level, pulled off of it pretty aggressively. Coffee also, as I mentioned, affected by the Eurozone issues that are out there. In addition to that, though, the main thing that's going to be probably long-term positive and bullish for coffee is that now the New York markets, the coffee markets, starting to focus on the new crop, moving out of the old crop into the new crop. So what that means is that a lot of the Roya fungus focus that you had in Central America and Costa Rica and major producers out there that have had their crop affected by the Roya fungus, now those fundamentals might come into play. But right now, it's too early on to kind of tell and call a bottom on this falling market. So 132.05 is going to be our new support for coffee in the May contract. So keep a pretty close eye on that. I'm still short-term bullish for the time, bearish for the time being on coffee. Moving on to cotton, last traded 88.61, which puts cotton up about 57 ticks in the May contract. I've been bullish for a while. If you've watched any of these videos, you know I've been cotton bullish. There's a good global demand for cotton. We've seen a really sharp rally and really quick ascending trend line to the upside. So we are watching China. China has said they'll do some limited buying. At the same time, they're going to be releasing some state stocks that they have, so it kind of counterbalances that part of China, whether they're going to be aggressive buyers or not. So no real help there, but keep in mind China has over half of the world's ending stocks of cotton, so we're watching them very closely. The main thing about cotton is it had sold off and it had been on what I believe to be a very aggressive correction. Notice that the open interest in the May contract was kind of waning and falling off, so that could be some of those longs just taking some profits at that point. So keep a close eye on cotton. I do expect that long-term cotton will be bullish. Support's going to come in at 86.12, and then basically you want to keep an eye on that 86.12 area. If it's to fall below that, you could have some real problems for cotton. Last but not least, sugar, which last traded at 17.92, put sugar up pretty much even, but 14 ticks in the May contract. There is a huge global surplus, as I mentioned in the last video, for the past 3 years of sugar. There is a large production outlook from Brazil for cane and sugar as well, so that's all bearish. The Indian government actually releases, it's been reported 10.4 million tons, and that's adding additional pressure onto the sugar market. It was able to break down below that 18 level, which is pretty critical, and now it's trading 17.92, so it's having a tough time breaking back above there. I continue to watch it. I believe that it's going to continue to sell off more, so I'm going to stay continued bearish on sugar for the time being. 1824 is going to be that resistance if you still want to be bullish, but 1788 is going to be our downside support in the near term. So if you have any questions or you'd like to know some strategies on futures or options on futures, you can reach me directly at area code 312-373-5392. Please keep in mind that futures trading does present some risk, and it is not suitable for all investors out there. Thanks and have a great afternoon.